In today's video, we're going to talk about whether a 15-year mortgage is better than a 30-year mortgage. So hit that subscribe button and turn on that notification bell so you stay up to date on when new videos come out. Fixed-rate mortgages are the simplest and most popular home loans, and they prevent the surprises that can come with adjustable rate mortgages, ARM, when your interest rate is subject to increase. But you still have a choice to make. Should you take out a 15-year mortgage or a 30-year mortgage? A 15-year mortgage minimizes your total borrowing costs and allows you to eliminate your mortgage debt relatively quickly. But a 30-year loan has lower monthly payments, allowing you to save for other goals and pay unexpected expenses. Whether you're thinking long-term or short-term, deciding how long you want to commit to your mortgage can affect your finances for years to come. Weighing the pros and cons of a 15-year mortgage can help you make the decision. So let's do the pros and cons real quick as an overview. The pros with a 15-year mortgage is you'll get a lower interest rate and pay less interest overall over the life of the loan. You'll be able to build equity in your property more quickly. And another pro is your mortgage is less likely to be underwater if you're forced to sell. Now the cons of a 15-year mortgage, your monthly payments will be higher because you're squeezing all that principal into a shorter term. Also, making higher mortgage payments might prevent you from saving for other things like retirement or emergencies. And lastly, you'll be at risk of default and foreclosure if life throws you a curveball like a job loss, so you can't meet your higher monthly payments. So let's talk about that more, your monthly payments. At first glance, the most noticeable difference between a 15-year and a 30-year loan is the required monthly payment. 30-year loans require a lower payment. Other less noticeable differences are also significant. Now, can you qualify for a 15-year loan? A 15-year mortgage might not be affordable for you, depending on your income and the size of your down payment. It might be appealing to stretch out your payments over 30 years instead of 15 if you're concerned about your monthly cash flow. Lenders approve your loan application based in part on your ability to repay the loan. They compare your monthly income to your monthly debt payments. Even if you feel comfortable with a 15-year payment, your debt-to-income ratio might disqualify you from these loans. Now let's consider other goals. If you're saving for retirement, a 30-year mortgage makes it easier to fund that goal. Instead of making a hefty mortgage payment every month, you'll have more free money in your budget to put towards long-term goals. Of course, if you go with a 30-year loan and you spend the money on wants every month instead, you might be better off with a 15-year loan instead. Now ask yourself, do you have the flexibility? A 30-year loan helps you keep your options open and absorbs life's expenses. If you change your job or lose your job, you'll probably appreciate that lower monthly payments. Now, how fast can you repay? A 15-year mortgage helps you pay down your loan balance quickly. You'll make a bigger dent in your debt than you would with a 30-year loan with each monthly payment. You'll owe less money at any given point in time, which offers several benefits. First, you build equity more quickly, which you can use for your next home purchase or other needs. Second, it's easier to refinance with a lower loan-to-value ratio. And third, you're less likely to be underwater if you find that you have to sell your home. Plus, you can stop making mortgage payments after 15 years instead of letting them linger for 30 years if you stay in your home. Now, what about your interest costs? You'll pay less interest with a 15-year mortgage than you would on 30-year mortgage. Two factors work in your favor. Number one, the interest rate. 15-year loans typically have a lower interest rate than a 30-year loan, so you'll pay less interest right from the beginning. Next, lifetime interest costs. The longer you borrow, the more interest you'll pay, and your loan balance, the amount you pay interest on, remains higher for longer. So let's do an example between a 15-year versus 30-year comparison. Assume you borrow $200,000 to buy a home, and you can choose between a 15-year and a 30-year mortgage. You can take a 30-year fixed-rate loan with a 4.1%, or you can take a 15-year fixed loan with a 3.43%. The 30-year loan has a lower monthly payment. 30-year payment is $966 per month. A 15-year payment is $1,432 per month. You'll pay down the balance faster with a 15-year loan. Remaining loan balance on the 30-year loan after 7 years is $172,513, and the remaining loan balance on the 15-year loan after 7 years is $119,674. So yes, you'll pay less interest with a 15-year loan, With a 30-year loan, you'll be paying $147,903 in interest costs over the life of your loan. With a 15-year loan, you'll pay only $56,122 in total interest costs. Now, here's an option you can do. If the 15-year payment is too intimidating, you can get a 30-year loan and pay extra every month instead. Just calculate your payments as if you have a 15-year mortgage, then make that higher payment unless and until an emergency prevents you from doing so. This strategy gets you out of debt sooner and you'll pay less interest than you would on a 30-year mortgage. But if you want to spend the absolute minimum on interest, commit to the 15-year mortgage so that you get the lowest possible rate from the start. And finally, what are your thoughts on the 15 and 30-year mortgage? Leave a comment down below and start a discussion. And as always, take care of your money. Oh, and one last thing before you go. I created a course called Smart Money Parenting as a way to teach parents how to educate their kids about money. An early financial education is the foundation for wealth building, so give your kids a future they deserve. Use code MONEY20 at checkout to receive 20% off my master course. I'll leave a link to the course down below.